Welcome to the Swing Trading with Cycles channel. We're going to do our update on uranium today. It's March 26, 2023. And we'll start with CCJ as we usually do. Definitely take a look at the pinned comment. Always, you can refer to that for previous videos. Also, other asset classes. Everything is organized by playlist. And some background on cycles on price action. This is your weekly chart for CCJ. We'll start here. And I'll zoom in here. And I tweeted about this. There's also a link to Twitter on that in that pinned comment. We are in weekly cycle decline for CCJ. Doesn't mean every single uranium name is doing the same exact thing, but that gives you a good proxy. But the important thing is that this is week 13, and this thing has bottomed on week 15 before, and so we could have a low right around the corner. So not exactly an amazing short opportunity yet per se. And let's think about this in the context of like retracements, right? So from this low here, the week of December 19th, to this swing high here, which was 8 weeks later, so an 8-week rally, we rallied for 39%, which was about $8.40. So the 50% retrace of that would be essentially a decline of $4.25. So we're obviously past that. So like that would put us like right down here. And so that's a good just kind of a reference point, which tells you if this weekly cycle decline goes much deeper, that's obviously, making this thing more and more bearish. Yet at the same time, again, because we're getting closer to like where we've seen like this week 15 low, we've had week lows on week 18, week 19, week 15, week 14 here. You want to be kind of careful. If we think about the daily cycle though, that gives you a sense of just being really sort of like tactical. If you think about like, okay, if you were gonna short this, you want to watch for the daily cycle, the DCL, the daily cycle low here. And so this is your daily chart here. We had this really long expansive rally that lasted 38 days. And then we had like a really short decline. And then we had this really short rally. So think about this, a 38-day rally and then only a 7-day rally. It's like, uh-oh. And what is the decline from this swing high to this low? So we drop about 10%, almost 11% in a few days. And then we have this really feeble rally for just 7 days. And then we roll over, make a significant new low. And then what do? We have another feeble rally and we're trying to make another lower low. It hasn't actually done that yet. But the expectation is that did we poke below it? We may have poked below it, actually. No, we didn't. So this is day 22 of a daily cycle. And you can see the previous daily cycle was day 42. Was 42 days, I should say. The one before that was 46. But we've had shorter ones. They're in the 30, 35-day range. All that to say, when we get a daily cycle low, that could also be our weekly cycle low. So you want to be vigilant of that if you're thinking about shorting this thing, if you have any inkling to do that at all. Because we're getting later in the daily cycle. It's already day 22. We topped out on day 7, which means we've been declining for, 15 days already. So at some point, we're going to get a bounce. And it's probably going to be something feeble like this. But the last thing you want to do is short like right here, right before this little 5, 6, 7-day rally starts. Obviously, position sizing could save you. And if we zoom out to the monthly chart, this just shows you this has been just nothing but chop. Look at this thing. So we go up and then we go down. It's like, oh, we're going down. No, we're not. We're going up. We're going down. No, we're not. We're going up. Another way to visualize this is if we roll this up to like the 12-month candles. Let's take off all the drawings. So you can see last year was a big doji of a year, which means it faked out to the upside and faked out to the downside, only to come back and close at the same place. And look at what we're doing so far in the first 3 months of 2023. Just a big inside year. So a doji year, and we're inside that. And that's all inside this wick here from 2021. All that to say, like if you kind of think about like from this, oh yeah, once I draw the lines, there's no going back. But if you kind of think about it in the context of like we've been kind of living inside like this wick, and this wick. We've just kind of been living in that zone for a really long time. At some point, this thing is going to break out, but watching the cycles and understanding that context is going to give you the best clue versus these folks will just tell you, oh, just hold, just buy and hold. Like, why would you want to hold through a downtrend when you can be more surgical about your entry? So that's CCJ. Let's look at some of the other names. Are things diverging? Because really, this is a big nothing burger. It's been all consolidation. No real signal in terms of like a big long-term sustained move. We're just kind of watching weekly cycles and we're just kind of oscillating within the same range. I mean, you can see it within the weekly cycles as well. Look at this. Big weekly cycle rally and then a big decline. Then a nice rally, then a decline. But what you'll notice is each of these highs have been lower than the last. So definitely skewing to the bearish side of things. So that's CCJ. Let's look at energy fuels. And I think we're going to see a lot of the same. So look at this monthly chart. Deep red monthly candle. But more importantly, we've basically been inside this consolidation box for like more than a year. Just like trading inside this range off of this big move up. Like what was that in terms of price? So from here to here makes sense, right? So we went up 230%, and since then we've just been kind of in this malaise, grindy action. I mean, you could say all the way up to here. We went up 400%, and then we just had a little bit of a false breakout, false breakdown, and now we're just kind of oscillating. So patience is needed here. In terms of just tactically, where are we? We are in weekly cycle decline. Similar picture to what we saw with CCJ. We are, so the high was week 6 so far. So this is also week 13. So pretty much the same count as CCJ. Patience needed here. Lower lows are ahead of us. And the daily cycle is already much closer to making a lower low on that tactical level. Ooh, Denison is below $1 now. Yikes. This thing was pushing $1.40 at one point. Uh-oh. I mean, at the same time, that's what happens when you have a weekly cycle decline. You get falling prices. So this one topped out on week 8, and we've just been cascading lower ever since. We're still above this big low here, which is also, okay, so we did kind of test that the previous week. So below 91 cents, things could get really dicey for for Denison. And you can look at the monthly chart again. Just, I'll take off the drawings. Just massive, ugly, disgusting consolidation. But more importantly, if we break these lows, you could see a world where we start to reverse some of this move. So you can kind of think of it as like this move started from like, yeesh, 37 cents. Doesn't mean we go all the way back to 37 cents. But we had this move from 37 cents all the way up to $1.80. And since then, we've just consolidated. In fact, I'll actually get the drawings back, but I'll get rid of some of these. It's actually much more simple for Denison. If you just really take a step back, everything that's happened since this candle in February 2021 has been consolidation inside that candle's range. Now we had some brief excursions outside of that range, right? Look at that. Crystal clear. Look at that. We had these little excursions outside of that range, and what did they end up being? Wicks, right? Upper wicks. So we had a wick above in October 2021, and then a wick above in November 21, which was the cycle top, the long-term cycle top. We clearly made a big swing high on that month. Like once we went below the low of this month here, which was $1.48. And so since then, it's all been massive consolidation. But notice, we've been nowhere near the lower end of this range. And so clearly the sort of logical conclusion of what we're seeing, this breakdown, would be a move down to call it, the 66 cents area, which would be pretty massive downside from here. I'm not saying we have to get there, but that's your downside risk potentially. Because I know people can have this feeling like, wait, it's already at 97 cents. How much further down can it go? Well, I mean, it could drop another 30%. Now it depends. Like, is that meaningful to you or not? What's your position size, etc. But important to see that potential risk there. What about UEC? How are we looking here? So UEC is in a very similar situation, obviously different levels. This rally, you could say, started somewhere around $1.04, maybe even as low as 85 cents. Yeah, really, look at this cluster of lows, right? So we consolidate for 1, 2, 3, 4, 5, 6, 7 months of just sideways action, and then boom, we burst for 1, 2, 3, 4 months. And what is that rally? Let's say from here to here. Nice, 249%. So it's not surprising after a 200, 300%, 400% rally, you get consolidation. This has lasted for ages. And you can see this is just kind of rolling over. So again, the threat is to essentially reverse most of this move And so, I mean, for starters, you would see a move down to $1.89. If it can't hold above $1.89, then it tells you we may be heading, you know, closer to $1 potentially even. I mean, I know that sounds kind of crazy. I mean, you could see price finding some support around $1.60 first. So those are some of your sort of key levels to kind of think about for uranium energy. And look at the daily chart on this bad boy. It looks like it might have made a daily cycle low. So again, thinking tactically here, we may see a little bit of a rally, not exactly the time to jump into a short position. So that's UEC. What about yellow cake? How are we looking? So monthly chart looking pretty ugly. So these are all not looking great because they're all in weekly cycle decline. It's not a surprise. This thing topped out on week 6, or I think we're in week 13, similar to the CCJ. So not very different from that. Elevate uranium, same picture, weekly cycle decline. What about UROY? Same deal. SBSW, this is more diversified, not just uranium, but it does happen to be in a weekly cycle decline as well. And it's actually been basing a little bit here. Yikes. Looks like this thing is ready to vomit a little bit. And you would think that the next area of potential support, or at least where you expect price to have some kind of reaction, is maybe around the $7 area. So that's another, well, that's not even huge. It's another 12% down from here. What about next gen? Weekly cycle decline. Yep. And for next gen, those floodgates potentially open below, let's call it $3.33. Kazatomprom, that is a bellwether for the group generally. And so this one is actually much higher above, or it's much further off the lows, I guess I should say. So this looks like a daily cycle low here on March 15th. So this is day 3, 4, 5, 6, potentially day 7. So this looks a little bit divergent from the rest of the complex. And in terms of the long term, this is your monthly chart. We had this big high back here in November 2021, like a lot of charts. And so the question is, this consolidation here that's been happening inside the range of this, is it going to break down to 22, or are we going to break up here, which was the base case, right? Like a move, maybe a month 14 high. Right now, it's looking like we may start the descent even sooner, if we assume that this was a major cycle low. And again, all of this action has been just consolidation inside this candle, so you could easily find yourself down at the 22 area. So maybe we don't get this month 14 high, and it may be that this was it. Yikes. That's Kazatomprom. What about Paladin Energy? I think it's showing the same pattern. These are all going to be very similar. Yep, weekly cycle decline, new lows on the monthly, not very differentiated. And finally, last two names. Let's look at Fission Uranium, and then we'll look at Fission 3.0. So Fission Uranium, same deal, weekly cycle decline. And this is also just made a new low on the daily chart on Friday. And so this one is going to make a daily cycle low probably sooner than some other names. So this will be a good one to watch for when we get a bounce, and we'll know that by when we see a daily swing low. So Fission 3.0. So this is one that I've been sort of stalking a little bit because it made this crazy move up. This is like 400%, and as price generally does, it's now just kind of chopping around, consolidating. So this was our last weekly daily cycle high at day 11. I've been just layering into this thing, really small position, until I can confirm, or there's a high degree of confidence that we've made a weekly cycle low. So you could say that was a daily cycle low here on day 26. And so now this is a new daily cycle. So 1, 2, 3, 4, 5, 6 on day 6. Now this has idiosyncratic news coming out, etc. So it could move. It could move in sort of potentially doesn't mean it will, in a potentially uncorrelated fashion to some degree. So that's day 6 of a new daily cycle. But more importantly, where is this thing on the weekly? I mean, look how ugly this is. Like if you don't understand price action, this could look really confusing and like, well, what the heck is happening? So most importantly, this candle here marks a swing high, and that happened on week 11. Do I have that? I thought I had, yeah. So that's week 11. And so since then, this was week 12, 13, 14, 15, 16, 17, 18, 19. So this is looking very interesting in terms of just at least the starting point of what you want to see. So last week actually closed as a swing low. And we know that because we closed above the high of this candle here. And so that tells you that this was potentially your weekly cycle low. I'll put this back on log. This was potentially your weekly cycle low here on week 19 after your weekly cycle high here on week 11. And you can even see there was a back test of that high here on week, what is that, 12, 13, 14, 15, 16. It looked like, oh, maybe this was the low that we were looking for. And then it said, no, it's not. We're going to make a lower low. You'd like to see that because the low that comes after that back test is generally an even more, there's even more confidence there because you've already kind of back tested it and failed. So this is really a promising one to potentially start adding to next week. Again, knowing that we're on day 6 of a new daily cycle. If that's also a new weekly cycle, then we could see at least a few weeks more upside, at least maybe come test these levels around here. So good potential upside in this one. And how does the monthly candle look? So again, we know that the monthly candle is going to close pretty soon. We only have a few days to trade. And so it looks like it's going to be an inside candle, which is actually what we had in February. We did end up making a lower low. We opened as an inside candle, but that's a high of 33 cents and a low of 20 cents. So obviously an enormous range, a 13-cent range on something that's trading at 27 cents. So like so the April candle we would expect to look something like this. And so we're really going to have to pay attention to the lower time frames because this isn't going to tell us much. We're going to be inside a pretty massive range. But at the same time, if we start to see bullish action on the lower time frames, then it tells us the likelihood that this is going to break to the upside increases, that we're going to break above 33 cents. And so having this vision in your mind of what the monthly chart needs to do, has to do, is trying to do is going to be important. So this is definitely a promising one. And in terms of market cap, this is actually, so it's okay. So it's 94 million now, which is not huge, but it's also not tiny, like not when it was down here at 5 cents, but still gives you some good upside without needing a ton of capital flows to make this thing move. So that's our lay of the land for uranium. In general, looking pretty bearish, but in terms of idiosyncratic names, Fission 3.0 is definitely looking like it might be waking up here, and easily a good 2, 3, 4x in terms of just looking at the market cap alone. So that's the update for uranium. We will leave it at that. Thanks for watching.